Hey folks, Dan Frio here with your closing bell for December 9th, 2024. So mortgage rates popped a little bit today. What's in store for us for the next week or two? Well, that's really important because the Federal Reserve's meeting next week, so we got to figure this out this week before they go in hiding and don't really tell us any more information. So we're going to highlight the data points that the Federal Reserve is going to be looking at this week, and then I'll give you my projection if I would lock or float at this time. So let's get to it. These are the top 6 programs people use when they're buying their first house. Now, these aren't my rates. Who gets these rates? That's what you might be asking. Well, there's 5 pieces of the puzzle that creates this rate. Okay, a lot of people will call in and say, Dan, what's your 30-year fixed rate? Well, I can't say 6.72 because I don't know, really about your situation. So here's the situation behind these rates. Okay, to get that 30-year fixed rate over there, you need 5 pieces of information for sure. Those 5 pieces are this. You're going to be a first-time home buyer. It's a single-family home, and you're going to live there. Okay, those are 3 of the first 5 questions. The other 2 questions are right through here, and it's right in the survey. If you go through this, it'll tell you right down through here. These people are actually putting down 25% because they have a loan at 75%, and they have a credit score of 780. So if that's not you, you don't need 20% down or 25% down. You don't even need a 780 credit score. But if that is you, that's most likely what your rate's going to be. If that's not you, I'm going to give you all my information at the end of this video because my name is Dan Frio. I'm actually a loan officer licensed in all 50 states as well as Puerto Rico. I'd love to help you maneuver, maybe buying that first house, buying that first investment property, refinancing, reverse mortgages, and investor loans. We can help you with all that stuff. So without further ado, let's look at today's data. So right through here, the only information we have coming out this week that really is going to be pertinent to what the Federal Reserve is going to do is the inflation numbers. They're coming in with the CPI and the PPI. That's coming in Wednesday and Thursday, so please pay attention to those dates. And then the initial jobless claims also come in on Thursday. So tomorrow I'm going to let you know for sure if I would be locking or floating going into this news, because here's what's going to happen. The CPI number, the inflation number, is going to come out first thing in the morning before the market opens. It's going to come out at 8:30. Well, banks open at 8:30 as well, but then they have to put their rate sheets together and everything else. So this data is going to be old news by the time banks put out their rate sheets. So this inflation data is going to be really relevant. If the number's bad, well, let's say bad in a way that inflation's ticking up. Well, rates could pop up really fast and really quick. Okay, they could maybe jump a quarter percent, maybe 0.3%. That's how bad some days get. If the number comes in really good, it actually could come down quite a bit. It could drop a quarter or 3/8, in that day. So it's really hard to determine because if we miss it by maybe a tenth or a hundredth, I could be wrong, and the rates could play a different role than what I'm expecting. But let's get into what I'm expecting. CPI is coming in. They're expecting the last reading is 0.3. They're expecting it to come in at 0.3. I'm actually going to say this might shock us. It might come in at a 0.4. If it comes in at 0.4, it might have some market reactions, but it might be subdued. But that's my anticipation. I'm thinking it's going to run just a tad hot, but I don't think it's going to be a huge wide event through the markets. But that's the CPI coming in on Wednesday. Now on Thursday, the PPI is going to come in. Well, it depends on how good or bad the CPI comes in, because if it's usually the markets react more on the CPI than the PPI. So let me explain to you what these are. Inflation right through here. The CPI is consumer inflation. Okay, so we're trying to focus in on what's going to happen with that. But the initial phase of this starts with the producers. So if producer prices are going up, then it's most likely going to roll over to the consumer. But unfortunately, how the markets look at it, they look at the CPI because that number comes out first, and then the PPI is sometimes irrelevant based on how these numbers come in. So if I got you confused, hang tight. Let's get over to the data that we're really here for. So let's take it over to Steve Leisman. He's going to kind of put a lot of this into context, what the Federal Reserve's most likely going to do and so forth. But when he comes back, I'm going to show you what the Chicago Mercantile Exchange is predicting and what the Federal Reserve is going to do at next week's meeting. And then also what they're expected to do throughout the next year, because that's really concerning to most of you. Most of you probably aren't buying a house in the next 2 to 3 weeks, but if you are, tomorrow's report that I give is going to be really important, because I'll give you a precursor if I would float or lock going into that news that we have coming out on Wednesday. So that's that. But let's get over to Steve Leisman so he can give us the data that we have for today. Then I'll show you market reactions accordingly right after this. So hang tight. Here comes Steve.
It's an important week for data. Let's get the first of a long series of prints, this time from the New York Fed with Steve Leisman. Hey, Steve.
Carl, good morning. The New York Fed survey of consumer expectations says inflation expectations rising among consumers 0.1% across all three horizons that they look at. In fact, let's take a look at those three horizons. The 1 year up 0.1 to 3%, the 3 year up the same amount to 2.6, and the 5 year up to 2.9%. Not a big jump. These reverse declines in the prior month, but something worth noticing in terms of the Fed being concerned that inflation expectations get stuck in this 2.5 to 3% range.
Okay, so he's going to break down the segments that are having price increases. I want you to pay attention to two elements that he talks about. Now, I'm not going to tease it to you right now, but let him say what he's going to say right now, and then I'm going to stop him real quick, and I want you to pay attention to this little segment that he's going to talk about right now.
Interestingly, this came with price expectations for gas and food, both declining by 0.5% and down 0.2% for rent, though that remains elevated. Price expectations rose for medical care and college education. Now,
medical care and college education, that's where the prices are going up. Well, that's why I'm not a proponent of the federal government stepping in and making all student loan basically debt free. So I know I get a lot of flack from people out there, but this is one of the proponents. The college tuition keeps going up and up and up. And if I'm a young person right now, I'm more concerned about getting my education, financed versus buying a house. And most of these student loans that we see right now, it's basically a house payment that you're going to be in. So be very careful before you start signing on that dotted line for your college tuition. But he did mention medical costs and tuition are the two areas that are driving up prices.
Now, the other side of the mandate, unemployment expectations rising by 0.5%, but remaining relatively low according to historic norms. But concern did rise about losing one's job, and also the confidence of finding a new one if you lose it. Well, that decline. So a little bit of a push me pull you on this, but those inflation expectations, guys, following the U of Michigan one last week, which rose pretty sharply for the 1 year ahead. Guys?
So they're expecting inflation to keep ticking up a little bit, little by little by little. But the Federal Reserve basically came out at the last couple meetings and said, inflation's not our concern now. It's the unemployment rate. So we're going to meticulously watch these numbers, but inflation is back into play. So that's what we're seeing right through there. So let's get over to the CME FedWatch tool. Again, these are for people. What are you expecting the Federal Reserve to do at the next few meetings? So this brings us all the way out till December of next year. So there's a rate cut expected in December, which you're seeing right through here. If it doesn't happen in December, it will happen in January. So the Fed's going to cut another quarter point. And then from there, what's going to happen? Well, there's not another rate cut expected till, look through here, March 19th, the March 19th meeting. Remember, they were rapidly going to start cutting rates back last year, but now that pace has slowed down quite a bit. So the last piece of this puzzle, this is the reason why I really don't want the federal government just giving money away, paying for everybody's stuff right through here. So what this is our national debt clock. This is how much money the government has on a credit card, basically. They overspend. So this is what comes up. So how they fund the government when they don't have enough money, they have to issue Treasury bills. And this is how much we have right now in the national debt. Think of it on a credit card. So please don't continue to give our money away, folks, in DC, because this is going to really cause havoc for us for a long time to come. So that's that report. So let's get over to the equities right now. The equities are all red across the board as well. So it's not that Cinderella story we had on Friday. Look through here. The Dow Jones is down 240. NASDAQ's down 120. Russell 2000's even down, and the VIX is up. So not a good day in the equity markets right through here. Cryptocurrencies, I think, gave a lot back as well. Yep, cryptocurrencies are down over 3% today, but that could be right back up tomorrow. So again, I only invest in Bitcoin and cryptocurrencies with that money. I put it on here instead of going to Vegas to blow my money. So that's what I do there. And then oil, we look at oil just for inflationary numbers. And oil is unchanged on the day. And that's usually not what happens. So I'd like oil being unchanged today. That means inflation on this side of the equation is going to be subdued for today. So that's my report. I told you I'd let you guys know who I am and what I do. Well, my name is Dan Frio. I'm actually a loan officer. I'm licensed in all 50 states as well as Puerto Rico. How many people can say that? Okay. Plus, I also work at a bank. Plus, I also work at a mortgage brokerage, a big one. So I have all the products here at ServBank to offer you, as well as about 40 other lenders that we work with as well. So how many other places can offer you all this in one package? So visit us at therateupdate.com. Here's my website. If you want to get the ball rolling, click the Apply Now button right through there if you'd like. If you're looking to buy your first house, please check and see if there's any grants out there available for you for that purchase. But what I want you to do is before you do anything, please schedule a consultation with us to let us know or at least help you maneuver your next home purchase or your next home finance. And you can do that right through here. Schedule a one-on-one consultation. You don't need to do that. If you'd rather call in, you can do that as well. Just scroll right down through here and you can give us a call. That number is 844-775-5626, or you can reach me at dan@therateupdate.com, and I will be the one replying to your emails. And a lot of times I'm the one also answering the phones. So please give us a call or shoot me an email. Love to help you out. Take care. God bless. Have a fantastic evening. See you back here tomorrow morning, folks. Bye-bye.